This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Germany is set to impose a levy on all gas consumers from October 1st aimed at helping suppliers struggling with soaring gas import prices, a draft law showed on Thursday. The levy aims to share the additional costs for replacing gas from Russia among all users, and prevent insolvencies among gas traders. Households and industrial consumers with long-term contracts will be hit by the charge, which will be valid until the end of September 2024, the document showed. Gas importers will have to bear rising costs by themselves until the levy kicks in.
OPEC and its allies will consider keeping oil output unchanged for September when they meet next week, despite calls from the United States for more supply, although a modest output increase is also likely to be discussed, 8 sources said. The Organization of the Petroleum Exporting Countries, OPEC, and allies led by Russia, collectively known as OPEC+, will by August have fully unwound record output cuts in place since the COVID-19 pandemic took hold in 2020. Oil has soared in 2022 to its highest since 2008, climbing above $139 a barrel in March, after the United States and Europe imposed sanctions on Russia over its invasion of Ukraine. Prices have since eased to around $108, as soaring inflation and higher interest rates raise fears of a recession that would erode demand.
Moving on to the top news in the energy sector.
Global coal demand is set to rise slightly this year to match a record high reached nearly a decade ago, the International Energy Agency, IEA, said on Thursday, as gas prices have soared. In a coal market update report, the IEA said global coal consumption is forecast to rise by 0.7% in 2022 to 8 billion tons, assuming the Chinese economy recovers as expected in the second half of the year. That would match a record high set in 2013, and coal demand is likely to increase further next year to an all-time high.
Oil rose more than $2 a barrel on Thursday, extending gains from the previous session, buoyed by improved risk appetite among investors as lower crude inventories and a rebound in gasoline demand in the United States supported prices. Brent crude futures for September rose $2.09, or 1.96%, to $108.71 a barrel by 12:01 GMT, after gaining $2.22 on Wednesday. U.S. West Texas Intermediate Crude, WTI, was at $99.62 a barrel, up $2.36, or 2.43%, after rising $2.28 in the previous session. Next, we have the top news in metal markets. Copper prices are expected to rebound further in the coming months after heavy losses, a Reuters poll showed, as China unleashes more infrastructure spending and other stimulus for the economy. Benchmark copper slid 36% in the 4 months after touching a record $10,845 a ton in March on fears that a slowdown in China and a potential global recession would curb demand. It has since bounced back by about 10%. Industrial metal prices may have undershot as the market mood shifted sharply from extremely bullish to bearish, said Julius Baer analyst Karsten Menk.
Russian metals producer Nornickel's first-half nickel and palladium output rose year-on-year thanks to returning production. 2 mines hit by flooding in 2021, the company said on Thursday. Nornickel, the world's largest producer of palladium and refined nickel, kept its previous 2022 output forecast unchanged despite difficulties posed by Western sanctions against Moscow over Ukraine. One of the key risks that might affect our production plans remains the supply disruption of high-performance equipment and spare parts, Chief Operating Officer Sergei Stepanov said in a statement.
We will now look at the top news in the agricultural sector.
India is set to allow mills to export around 1 million ton of sugar, mostly unrefined, after allowing companies requests to let them ship out stocks that had piled up in ports and warehouses, government and trade sources said on Thursday. Logistics problems, such as a shortage of railway wagons, have prevented mills from shipping raws or unrefined sugar, which mounted up after New Delhi in May capped this season's exports at 10 million tons to prevent a surge in domestic prices. There's a surplus in the country, and as we know, raw sugar stocks are meant for the export market, so it makes sense to allow them to be exported, a government source, who asked not to be named in line with official rules, said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.